U.S. stocks ended flat on Tuesday as investors digested a mixed bag of earnings from some big names on Wall Street. The Dow and Nasdaq fell fractionally, while the S&P 500 eked out a slight gain. Shares of Goldman Sachs dropped after the Wall Street firm's profit fell 19% as deal-making and bond trading slumped. And Johnson & Johnson shares fell after the healthcare conglomerate cautioned investors over the lingering impact of inflation-driven costs this year. The early quarterly results from S&P 500 companies come as investors have been bracing for a gloomy reporting season, fearing the economy may be on the cusp of a downturn.
I think 2023 could be the year where the valuation is going to be based on the stabilization of earnings going forward.
Louise Gowdy-Wilmering is partner at Crew Advisors.
If the market doesn't have good insight into what those earnings look like, or there is lots of disappointment, I think it could be a rocky year. The bar has been set low, so earnings are coming in ahead in many cases of where the estimates have been. But I think as we look into the summer, as those earnings come out for the next quarter, it'll give us a better indication.
One company that beat estimates was Lockheed Martin. Shares rose 2.4% after the U.S. weapons maker's first quarter results surpassed Wall Street targets despite parts and labor shortages. Shares of Netflix fell in initial after-hours trading on Tuesday after the streaming service reported first-quarter revenue and earnings roughly in line with Wall Street expectations, but offered a forecast below analyst estimates for the next 3 months. Finally, shares of NVIDIA rose 2.5% after HSBC raised its recommendation on the graphics chipmaker to buy from reduce.